Hello guys, welcome back to another Lumley training video. In this one we're going to be doing some in-depth stock analysis on DraftKings, ticker DKNG. Reason for it is, as you can see, it's down 9% today, and at least on my personal watch list it was it's the leading stock down of the day. So it just makes sense to do it because it's probably more of a well-known name than SDC. Plus we did one on SDC pretty recently. So to get straight into it, we always go onto a clean daily chart, see is there any gaps that need to be filled, because if there's any gaps they're more likely to be filled, so we have some of these targets to the upside. But one thing that does stand out quite with DraftKings is that there is really no gaps to be filled, and you don't really see that too often on a lot of stocks. And that is one thing to be a bit cautious of on the downside. Is usually just stocks when they go down massively is they'll gap down and then come back and retest, and that's why you usually know they're going to be bouncing and maybe will return to an uptrend. But on DraftKings it's just quite a solid, simple downward trend, which is not something you really see all that often, and can raise some concerns. But as there's no gaps to be filled, we will then just be looking more at the standard deviation of the chart. And we can see right now we have just come into the second deviation on the 4 hours, so we would be expecting to see some sort of a bounce here. Doesn't mean it's going to reverse here, but we would expect to see at least a bounce here. However, one thing to take into account is that with DraftKings it's come into a few deviations now. It's come onto the second deviation on the daily, it's come into the first deviation on the daily, it's come into the first deviation on the 4 hour as well. And we haven't had that bounce we usually see on nearly all stocks. So that's just showing that there is a lot of selling pressure. So even if you are looking to get long on this, I would definitely recommend taking smaller size than usual, just because it's not really getting its bounces that we would like to see. So getting into the analysis side of it, yeah, where we are now is considered a bounce area. So if you've gone to a 5-day, 5 minute, you can see kind of, yeah, as it came in intraday, then it kind of hovered around this area before breaking down, retesting, and it looks like we're retesting this. So if markets open, when markets open Monday, if we are still below this 18 kind of 30 area, then we would expect it to continue down lower. And where would we expect it to push down to? We would have the first target around 2260, and then a lower one at 2030. So I'm not going to say it won't be unreasonable to see DraftKings down at that $22 and $20 level. Reason for that is the way it's selling off is not something you see often. Like I said, it's not really gap down, it's just slowly creeping, or quite quickly actually creeping down. So we will expect to see a bounce, and it will probably be quite a big bounce, but it's one of these moves where you don't want to be catching a falling knife. So if you're looking to do this, it's probably good to be doing it in small size. And if you do watch the small account challenge we're doing on here, you will know we do own some DraftKings, and obviously that position is down now quite a bit. But that's why we started off the size so small, because we saw this pattern early. We caught it around here. Actually, I think we started getting in at 36, and we could see it was falling without any gap. So as soon as we see that, we instantly cut size, because it's more of trying to catch a falling knife. So yeah, that's just one big thing to take into account. It looks like it's getting even sharper. The last few days it's just been really sharp, so we would expect to see it bounce, but again, just take that as some caution, because it is like catching a falling knife, especially in one like this where it's selling off so sharp. So yeah, for right now we don't really see it breaking below $20. We would expect $20 to be kind of that bottom, and expect to see a reversal. What is also quite good as well is on the 4 hour at least, we are starting to see a divergence. So we're selling off, and obviously the selling pressure isn't as strong. However, again, the same problem we have is on the daily. It's not really matching up. On the daily we don't have this same divergence. So seeing this, it doesn't give you the same conviction. You usually see it on both the 4 hour and the daily. If you don't see it on the same, you usually take less notice of it. So something we're not really going to be considering is the divergence, because it's not really going to uphold if one's just showing you and one's not. So yeah, kind of in a summary, we'll be looking to get long. We are long some now, but we'll be looking to get long a bit more, coming down into the 22.50 to the $20 level. Don't really expect it to push down lower than that, but it's always possible. And as the deviations are facing down, you are taking more risk going long, because the overall trend then for the year is more downwards. And also the concern you've got to take is, let's say the bottom deviation right now is at $20.38. As deviations are facing down, when market opens on Monday, that level will be lower. It may be down to around near enough the whole dollar of 20. So that's just another thing you want to take into account. When deviations are facing down, the values will keep dropping, and that's usually why we only trade, or we tend to prefer to trade, when the deviations are in the same direction. For example, something like DraftKings, it would be something good to short around the $50 level, because the deviations are facing down. That it means your risk can get smaller on every day, but your profit potential gets bigger every day. So that's one way you can look at it with the deviations, is it's good to trade in the direction they're facing. So that's one added risk you do take with DraftKings, is that they are facing down on both the 4-hour and the daily, so you are taking that greater risk on getting long. But if you are looking to get long, we are right now considered a low risk long, and if we do push down further, the $22.50 and the $20 whole dollar are levels we would look to get a further amount of long. Now, where would we be looking to take in profits? So if you do get long at that $20 mark, we will be looking to lock in profits kind of where we are now, around this $28 level. Reason for that is, if the stock's going to continue down, this is the level it will bounce to before continuing down. So at least if you don't lock in profits there, at least move your stop up when we come into that level. But for a level we'll be looking more for, we would definitely be locking on some profits around the $35 to $38 level. Reason for that is it's the first deviation. So again, if it's going to continue lower, this could just be quite a large pullback to this 35 to 38. Before continuing lower, so we definitely want to be locking in some profits there. But we will look to get completely out of the trade around $43 to $46. Reason for that is that is the statistical mean. When stocks come into the statistical mean, then direction is unclear. If we're, for example, down at the third deviation or second deviation as we are now, we have more chance, or we can predict that prices will bounce up and to this statistical mean. So we would expect it to kind of rise to this $40 level. However, once we're hovering between kind of $43 and $46, we are in that statistical deviation mean range, and then we don't really know where stock's going to be. It could easily go up, it could easily go down, and from there it's usually more of a fundamental basis way. So it will usually be on whatever news comes out, we'll push it either up or down from there. And you can see this on countless occasions on any stocks that are near statistical means, which you're not really going to see right now because the market is selling off so heavy. Especially on the stocks, because I did see one interesting thing about it. It was something about, I think it was like 400 or 380 of the stocks out of the S&P 500 are all down more than 25%. So it's a strange time to be trading. You can definitely say that. So just make sure you're managing the risk in these kind of environments, or if you're investing, I guess it is a good time to be getting some investments in, and it's definitely something I'm stacking up on personally. So I hope you enjoyed the video on DraftKings. Hope to see you in the next one, and that's it. Peace.
I wanna go, I wanna fly, I wanna take myself